Welcome to our daily Forex market analysis. My name is Schimming, and this review is for Tuesday, March the 5th. Now you know, as we have been doing these daily reviews, that the emphasis for 2013 has in fact been on the yen pairs, and that's been primarily because the average trading range and the technical signals provided by the yen pairs have been superior over the dollar pairs. But as I've said repeatedly, as a trader we must be chameleons. We must be able to adjust and change our focus or our priority based on what the market is providing. And over the past several days, the emphasis has not been on the yen pairs. Now you know that my belief is that the euro yen and pound yen have been in a very obvious state of transition. They've moved too far to the upside and we're due for some type of pullback, which we have now seen. But over the last few days, even though we got a pullback, I think there's still some room to the downside, but we are once again in a transition, what I want to talk about today and look at. But for the last few days, especially for Monday and Tuesday thus far, the trades have been in the dollar pairs. Pound dollar specifically, I think, has been one of the better trading pairs. And so that has been the play that we have looked at in the trade room today, and yesterday we were in pound trades specifically. So let's take a look. If we go back to this euro yen, which has been an easy one to identify, and it is the pair with the greatest trading range. And so you can go back to the earlier reviews, and you know that I've been consistently using this as the example, largely in fact because it is the most actively traded pair based on average daily trading range. And so I think also that is creating some of the better opportunities. But this pair has been in transition, and we look back in mid-January in this section right here. To the left side of the screen is where I identified the first transitional point, or the first opportunity where we could clearly see the pair was running out of steam to the upside. And largely, in fact, that's identified by the massive drawdowns in price that we saw those weeks. There's a week here and a week on the second pullback where we were in a downtrend in an overall uptrend. So that's a very confusing state of events for most traders, especially traders who aren't taking a step back and taking the time to look at what's really happening. I call that the Monet. And if you're not doing a review of a longer term picture, and you really set yourself up for a dangerous situation as you place trades, because even though the opportunity at that section of time was short, the overall uptrend was long. So how we would handle that short and my ability to stay with the short for a longer period of time is greatly reduced. But again, if you're not aware of your surroundings, you might get caught out, and even though you're making the right directional trade decision, that trade may result in a loss if you're being too greedy and too aggressive placing the trade. As we got into the upper ranges, especially over the 124, 125, 126 range, and that little break above 127 right here where we had the 123 pattern, which I identified for you several weeks back, then that's where the market really has been in transition. And ultimately, I've got the trend line up here, and ultimately we broke trend. And what was support became resistance. And then I marked for you last week and the week prior, we started looking at, even though we were consolidating, the highs were getting lower and the lows were getting lower. So we have a pair that's in a consolidative mode or a transitional mode, but yet the overall progress is to the downside. And so that does become the reason that we would be biased and looking for the shorting opportunity. And as I said in earlier reviews, it doesn't mean it can't go higher. What I clearly stated was I'm looking for the short. I think the short is more than likely. I want to see the short, and I think the short provides the best opportunity. And it has. The problem is right now is this drop right here, which confirmed everything I've been saying, but also was too sharp of a move to the downside. And you can see, based on this most current trend line, what was support, this lower trend line becomes support, now has become resistance. And so what we're faced with, if we add the trend line to this bottoming pattern, is now we're in a series where the lows are getting higher and the highs are getting lower. We have a pennant. Something has to give. And what's happened is, if this was support back in here, we had support at 124, It came down at 123.5, came down to 123, came down to 122, and then as that trend line continues to come down, now it's produced resistance. But at this junction here, it got up and traded along there and now has broken above. So we can see that these lows were getting higher in here, even though the highs were getting lower. That's a confusing situation for a lot of traders. And then most recently, it has accelerated even more. So the question is, can it move back higher? We would be looking at the 122 level, which I pointed out last week. 122 becomes pretty critical, and we've tested that. We've actually broken just above it by less than 20 pips once on this very high mark. Can we get above 122? Can we get back to the 123.50? And can we get to 124, which that was the bottom end of the support levels back here, which are going to be resistance levels as we move forward. Remember, transitions happen often. Consolidations and transitions are part of your 7 market events. There's only 7 things that can happen in the marketplace when we're watching the pairs. There's 7 specific events that happen in a pair's cycle. And so we're always and constantly looking for which of the 7 market events we are experiencing. I teach a class specifically on identifying and understanding and recognizing the hierarchy and the chain of those 7 market events, which I'd be more than happy to share. However, the most difficult of those is going to be when the pairs are in a consolidation or transition. And as I've said repeatedly, the transitions usually only become clear in retrospect. So it's our job as a trader to be trying to identify when we are trending, which I think is fairly obvious and straightforward, and when we are not trending, which again I think is pretty obvious and straightforward. If you're not clear on it, then you need to educate yourself and seek a little bit more guidance. And again, we are here to help you if that is of interest to you. So now that we've transitioned, we have pulled back a little bit. We did drop. If this is 127.70 at the high end, this is 118.80 on the low end. So we've given a healthy pullback, and this rapid descent here really changes the game. When we're up here at the top and we're transitioning, that means we have buyers and sellers colliding with each other. And as the lows were getting lower and the highs were getting lower, that tells you that the buyers down here at the bottom at the lows were backing down a little bit lower, and they were coming in at lower prices, and the sellers were also coming in at lower prices. So the downward movement was winning the overall war. Now we drop down and we still pulled back. Some would say that's a healthy enough pullback. And now the buyers are coming at a little bit higher price, a little bit more aggressively. When we were up at the top, going to new highs, to uncharted ground, as I said, was difficult, because if we were to break into new high ground, we really have nothing to draw from. We don't have support or resistance ranges to use as targets and objectives and ways to look at the pair. We're where it's never been before. Charting, seeking and being in uncharted territory becomes very difficult waters, but we would embrace if we get there. And that's why I'm saying we want it. Doesn't mean it had to come down, but ideally we would see a pullback, because we could look at all those support levels and use those both as price targets and places from us, locations to instigate a trade and targets for those trades once we take them. Now we've pulled back. If we choose to go up here, if the buying activity in the pair gets back into an uptrend, that is fine. And now we have 122, 123, 123.5, 124, that 126, 127, and ultimately that 127.70, the high range. So as it approaches 128, we do have some identifiable levels to draw from and to consider and to use as targets if we start moving higher. Here's the problem with that. The yen since February 12th has seen a transitional change in strength versus the weakness it had been experiencing for months. I still contend that something has happened there. So as long as the yen is going to maintain overall strength, and the best way to see that, in my opinion, is looking at my currency strength chart, that has been showing overall, barring Fridays and Mondays, it seems traders are being pretty reasonable and not wanting to bank on yen strength at the end of the week or the start of the week. And what that tells me is that's the institutional money. That's the smart money, the big money, which is not the herd. The herd usually doesn't operate reasonably. The herd usually makes mass decisions, and largely, in fact, ask a long-standing market participant, they'll tell you that typically the herd is wrong. But the herd can't influence the market overall. And so when we see something obvious and something consistently happening, I don't think that is the herd. I think that's the larger institutional, what we would call, for lack of a better word, not to say any of us aren't smart, but I would think that is the smarter money, is saying overall the yen needs to go up from here, but I'm not taking that, I'm not banking on that on Fridays and Mondays. I'm not carrying a long yen position into the weekend, and I'm not starting the week with it either, because I want to let the market kind of dictate and let the market start moving on its own before I place these large bets. Making smart decisions, making very conservative and wise and patient decisions inside the overall progression of the yen. If I am right, then that means that we will see this pair break down some more, and I still contend that would be the most ideal situation. It's not a guarantee. Again, as a trader, I will say almost daily that your job as a trader is to anticipate the possibilities, which means what does it take for it to go up and look long, what does it take for it to look short and start going down, and what does it take to maintain a sideways momentum. Or lack of momentum, I should say. What about the sideways activity? What is the criteria? Where are the levels that I think this is long? What are the levels that would say this is breaking down? What are the levels that say it's confined and in a range? You need to be considering the possibilities, anticipating what is possible, and then reacting to the reality. And I will repeatedly say that's easier said than done. Most traders are too busy trying to predict what's happening to sometimes even notice what's really going on around them. Again, that goes to my Monet process and using the zones. So where are we? And how do we deal with this right now as we're in transition? What's our next step as a trader? It's just what I said. It's identifying what is a resistance level above where we are, what do we need to break through in order to come out of this and start moving higher still, or what constitutes that it's breaking down and trading lower. Remember, this transitional state back here, which I'll mark real quickly, that first transitional moment happened back here in mid to late January right here. So, and that's why we found support. What was stopping and finding the first chance for the yen pair to run out of steam or air, so to speak, those support and resistance levels have now come into play. So now that we've broken above this and we came out of the pennant, it had to come one way or the other, and unfortunately or fortunately, however that goes, it broke to the upside. So where are we? If we're looking at the euro yen specifically, then we're talking 122 on the upside and 121 on the downside in the very near term. If we go to the upside, then we're going to start talking about those other levels, 123, 123 and a half, 124, and then ultimately the upper end of this transitional phase was that 126 and 127 range, and anything over 127. If we have the momentum to get back up to the 126, 127 range, even though it's going to be met with a lot of resistance up there, you would be fairly wise in anticipating a pair that could, in fact, have enough momentum to keep going. That would be an amazing situation at this point. The downside, I still contend, would be more attractive from a trading standpoint because we have identifiable support levels to reach to and to trade to. So 121 would be the first caveat of this thing falling back into this pennant situation. And ultimately that 120, 119, getting below this low right here is that 118.80, 118.70 something was the ultimate low down here. And getting to that level would be the caveat to see this trade much lower, 118.72. So the near term saying it can't just sit here. It's consolidating. You look at the consolidation here on the trend line. You look at the consolidation just above the trend line. But it's not back up into this range yet. It's trying. But my suggestion is if the yen continues to maintain strength, can it in fact really get higher? Or is this just a pause and a good little retracement in order for it to go lower? Now let's look at this a little bit differently. Since I use pure price analysis only, we're going to move this to a 20 pip range and zoom in just on the most recent activity on this pair. And so let's zip this in just a little bit because I'm really going to go back to that drop. and looking at that sharp drop, which is what's the caveat to where we might go here moving forward. So if we look at this, now you can start to really see those series of higher highs and higher lows. You can really see this. But let's look at this high move when we did the precipitous drop and consider that this is just a retracement. You know, just for a moment, let yourself consider the fact that this thing is still short. So if we take this and look at the retracement level, and I'm just going to use the simple fib lines and put them on from the low and take them up to that high. And I want you to see that what you're going to notice is the retracement is basically, we're right now at a 50% retracement level. If the projection will allow me to drop these fibs on here. Oops, right there. So now we see ourselves at a 50% retracement. There we go, finally. So you see we've retraced up to the 50% level, assuming that this was tracking from the sharp drop. We've come up, and so some of us would argue that a 61.8 would be the ideal level. If we could get up to this range, which is going to get us back into that 122s, at the same time I'd like to see it stay under 122. So from a retracement standpoint, this isn't anything to be afraid of. Even though it looks like it's moved quite a little bit, from a retracement aspect, this is actually quite attractive. And then you can see as it moves down where 122 becomes an issue, where 120 becomes an issue. Look at the resistance at 120 and look at the support at 120. And then ultimately coming down to this 119 and below. This is that low at 118.71 or 72, whatever the case may be. So to the downside, we have some pretty identifiable levels that I think would be attractive to approach. To the upside, it's getting over that 122. And we can start looking at not only the fibs, but we can go back to the resistance levels that we know, which is that 123, 123, and 123 and a half, and 124. I hate to be redundant, but those are them. You can also see this in the pound yen. You can see something similar in the Swiss yen. Those are the three most actively traded pairs right now based on average daily trading range and overall volume. I think those are the three pairs that are providing the best opportunities overall, just not this week, because the yen has been somewhat in a funk at the tail end of last week and this week, the consolidation. So for those of you who have been looking at the yen pairs, you know these last few trading days, they've been a mess. They've been really difficult to identify and a mess. So when you see that and you start thinking, hey, this pair, I can't tell, I'm not sure. Don't think you're the only one that's seeing the difficulty of that or not sure about that. You're not the only one. When you feel that way, chances are other traders feel that way. And the easiest thing for you to do is nothing. You don't have to trade the pair. Look for the pairs that are doing something a little bit more consistent. Go look at your pound dollar. It's been a little bit more consistent in its movement and opportunity. And that has been a great alternative this week while the yen pairs are not sure of themselves or not making a clear entry and exit decisions for us to grasp to. Something's happening here. It can't just sit here and go sideways forever, and that's the beauty of this. Something's got to give. And what I'm suggesting is I want you prepared, and I want you ready, and I want you anticipating either side of the coin, so as it starts to produce some results that you in fact can take the trade with confidence and actually make some pip gains. And that's what we've been doing in the room. So if you're interested in trading with us and doing this analysis live, real time, during the trading day, we invite you to trade with us and come and experience what we do firsthand. Sit with me and my group and trade with us on a daily basis. It's a very simple prospect. Just send an email to info@fxrbc.com, forexrangebarcharts.com, fxrbc.com. And we'll get you set up with an invitation and the ability to come in on the floor. I think we've got some invites going to go out for the not next week, but the week after. So if you want to be in that group, we've got quite a few that want to come into the group. We're going to bring you guys in as a group. We've got a questionnaire for you, and we'd love to have you be in the room for a few weeks and experience the difference of proper analysis and looking at pure charting technology with our Forex range bar charts. And we want you to experience that difference firsthand. Not trying to get you to stop doing what you're doing. Want you to take our methods and merge it with your current process. and help you become a better, more stable trader with more information, more education, and more technology at your fingertips with a little bit more simplistic approach, and one that's proven that will yield you positive results. If you're interested, send the email info@fxrbc.com, and that email address is clearly listed on this video. I hope to see you in the room, and I hope to see you on further reviewing further videos. If you have any questions, post them at the bottom of this video and I will answer it in a future review. And as always, you guys and gals, have a great day trading.